What is up, everybody? This is Books of the Stock Market. I hope everyone is doing well. This is the Sunday report where I cover the top articles from Monday through Friday. At the end of each article, I'll be giving my thoughts on how the article could impact or has impacted the financial markets. Without further ado, let's get into this week's Sunday report. On Monday, major oil refineries went offline due to the polar vortex coming over Texas. The cold conditions also caused electricity, water, and other fuel-dependent services to be turned off. The freeze in oil refineries in Texas has caused more than 3 million barrels to not be created. Oil is up 1.08% for the day. Adding insult to injury, the Middle East tensions increase. A Saudi Arabia-led coalition in Yemen intercepted a drone with explosives. The Saudis believe that it was the Houthi group, which is backed by Iran. With the major oil-producing countries in the Middle East starting to fight, oil could rise significantly. I believe that this rise in oil will not have an impact on the financial markets as much due to the low interest environment and the governments around the world doing anything to prop the market up. Probably something worse needs to happen for the ever-rising financial markets to fall. Also on Monday, the economy of Japan beat expectations in the fourth quarter growth. Most of this economic recovery was due to exports increasing and government aid. They believe Japan won't recover fully due to Japan lagging behind Western countries in vaccine rollouts. This raises the chance that Japan will see another round of coronavirus infections. Even with this negative forecast, many people believe that the upcoming first quarter will not be as bad as expected. From my point of view, it looks like many countries are in the same spot as Japan, where their economy is very fragile. If one mutation of the coronavirus or even just the ordinary coronavirus has an outbreak in any country, we could see this house of cards fall. On Tuesday, Bitcoin hit the $50,000 mark. For this year, it has risen 67%. The move upwards is mainly attributed to more companies and banks buying into Bitcoin. Only things stopping Bitcoin from rising to the moon are governments. For instance, US Treasury Secretary Janet Yellen and European Central Bank President Christine Lagarde both said Bitcoin should be regulated. Additionally, MicroStrategy is set to borrow $600 million so that they can buy more Bitcoin. MicroStrategy has risen 580% in the year. The company's regulatory filings show that they hold 72,000 Bitcoin, which is worth $3.6 billion. Bitcoin, however, has retracted back below the 50,000 mark at the end of Tuesday. Overall, I like what is happening. With the media constantly reporting it, it may cause more people to get into cryptocurrency. Also, the big moves that Tesla made may cause other companies to FOMO in. This will obviously push up the price of Bitcoin. On Tuesday, it was reported that Ebola is back in West Africa. Guinea's National Health Security Agency said that 3 people tested positive and there are 10 other people who are waiting for their results. Fortunately, there were no cases outside of Guinea that was reported. Obviously, this is not a good time for another Ebola break to happen, as this time governments are still injured from the coronavirus. Neighboring countries are strengthening their borders to prevent the spread of Ebola. This could be the black swan event that everyone is looking for. If it spreads outside of the African continent, that would be pretty bad. However, the 2014-2015 Ebola outbreak was contained within Africa, so hopefully the same precautions can be applied this time. On Tuesday, it was announced that Warren Buffett invested $8.6 billion into Verizon and $4.1 billion into Chevron. Berkshire reduced its investment in several companies to allow for these two additions. One of the companies was Apple. Chevron is up 2.54% after hours. Verizon, on the other hand, is up 3.05% after hours. Many people view this as Buffett doing Buffett things as he is going into value stocks. Berkshire also increased its holding in Bank of America, AbbVie, and other pharmaceutical companies. Nothing is that surprising other than his move into oil. It seems to me that he thinks that the US is not ready to move on from oil, even with a Democratic-led government. This is a fairly reasonable assumption as the US infrastructure as of now can't really transition into green energy. On Wednesday, it was introduced that Keith Gill is being sued by a class action lawsuit due to his involvement in GME. They're suing Gill on the fact that he's a licensed securities professional who manipulated the market using Reddit. The suit was filed by Higgins, Berman, Sobel, Shapiro for its client Christian Iovine of Washington State. Christian Iovine sold $200,000 worth of call options but were forced to liquidate as prices surged to $400. Gill stated that even though he worked in a financial industry, he never traded securities. Personally, this is a pretty messed up situation. From his YouTube videos, you can see him talk about GME ever since July 2020. I guess if the rich lose money, it's not their fault. Wrapping up Wednesday, we saw dollar, yields, and Bitcoin up. Bitcoin hit $52,216 at the time of recording. The dollar is also up 0.46%. Bond yields were up at 1.316% but closed slightly red. All of this bullish price action is due to US retail sales beating expectations. Retail sales increased 5.3% last month, while many economists were predicting only a 1.1% increase. People are attributing this beat to government spending in the form of stimulus checks. As the dollar rose, stocks opened red but closed relatively flat. The only interesting part of this was that Bitcoin was rising with the dollar. Personally, I'm in the Bitcoin train due to inflation worries since the government is printing a ton of money. However, both went up, which was interesting. Also, it's nice to know that the stimulus plans are actually working to keep the markets propped up, as if they weren't, it would be a waste of money. On Thursday, Yellen said Biden's infrastructure, climate, and education plans will be paid for by tax hikes. The details of this plan is not finalized, but it is suspected that it will be announced later this year. Yellen plans to gradually increase taxes to allow for the plan to be funded for the next couple of years. Furthermore, she said that she supports the $1.9 trillion stimulus plan so that the employment can reach pre-pandemic levels. Yellen also stated she is not worried about inflation. She says that the Federal Reserve have a lot of tools left. Many people were worrying about tax hikes when the Democrats won the election. I believe that they will be increasing capital gains taxes, and this can have a negative effect on the financial markets as people will want to sell before these changes take place. Another interesting comment is that she is not worried about inflation, which just seems to be politician talk. I mean, how can you not be worried about inflation when you're injecting a bunch of money into the economy? So far, when Yellen speaks, nothing much comes out of it as she just gives the same old PR responses. On Thursday, the head of Robinhood, Wall Street hedge fund managers, Keith Gill, and CEO of Reddit testified at Congress. Billionaire Citadel CEO Ken Griffin defended his business. Robinhood CEO Vlad Tenev said that he screwed up, but it won't happen again. Keith Gill also interviewed and maintained his stance that he liked the stock and didn't manipulate anyone to cause a short squeeze. The CEO of Reddit, Steve Huffman, was asked the question if they saw any sort of manipulation, and he said that he didn't see any. This testimony went as expected in that everyone said that it wasn't their fault. It seems like this session will be the only punishment for the hedge funds halting the trades. Next week, we will have another series of interesting hearings. Congress is planning to ask big tech some questions over antitrust laws and the roles in the most recent presidential election. The CEOs of Facebook, Google, and Twitter will be the main players in this hearing. It'll be interesting to hear what their responses will be on misinformation spreading and their choice on permanently banning certain players in the most recent election. It is evident that big tech has a lot of power in terms of controlling the political narrative. Furthermore, the breakup of big tech is a bipartisan topic, so we should see a bit more cooperation between the Republicans and the Democrats. On Friday, Democratic lawmakers are pushing for a tax on transactions in the stock market. This means that they'll be taking money from every security trade you make. Lobbyists from Wall Street strongly disagree with this new proposal, and some top Democrats do not support this proposal at all. Also, other Democrats are proposing additional local taxes on exchanges such as the New York Stock Exchange. Out of all the things they try to regulate or at least hinder the average people's ability to trade. I mean, who do they think they're trying to protect? The details for what the rates are for this tax is unknown, but it better be proportional to maybe income since Wall Streeters and retail shouldn't be paying the same amount of tax. I do not like this proposal as this further restricts the retail traders' ability to trade. The New York Federal Reserve President John Williams said that he's not worried about the financial markets. He expects stocks to push higher due to the low interest environment. He further states he does not think company valuations are overextended and expects the market to rise even further. He is also not concerned about policymakers providing high amounts of monetary stimulus due to COVID-19. Echoing Yellen's words, he said that there are ways to get back to the 2% inflation target, so the government should be providing continuous stimulus till maximum employment can be achieved. I believe that like the past few months, this further proves that the stock market will not crash like so many people are predicting. I don't know why people on Twitter and YouTube are calling for the top when there's nothing that indicates the top is here. Yes, evaluations are out of this world when compared to historical data. However, interest rates are also incredibly low when compared to historical data as well. Since the two are proportional, I don't see any way in the immediate future for a top. Like I said before, the only worrying trend is rising yields as that could pressure the stock market. Also, if the stock market does indeed crash, then we have a pretty screwed up situation since at that point the government failed to keep the markets propped up. However, the government so far is successfully keeping the music going. So, what are my thoughts on this week? Everything looks good, but the only thing that worries me are the rising yields. It is strange for yields and the dollar to be up when the US government is literally spending more than they have in the entire history of the United States. Well, that's it for me. If you like this video, press the like button. If you have any questions, leave a comment below. If you don't want to miss out on future content, press the subscribe button. Thanks for tuning in, and I'll see you around next week.